Hello there. We're seeing a lot more volatility in stock markets recently, and a lot of this is being driven by volatility in some of the economic data that's coming out. It's a year on really since we saw the real worst of the pandemic in terms of markets at least. And so because a lot of the data that we see, the economic data, is based on 1 year to the next, you get some strange anomalies. And we particularly see that is in inflation, where we're seeing some very high inflation numbers, particularly in the US, sort of 5% or so inflation, and also higher than expected inflation here in the UK, where it's back above 2%. But a lot of this is down to a couple of factors, mainly what we call base effects. Basically, that because inflation was low this time last year, we're 1 year on, it's comparing prices from 1 year to the next, it just makes them look artificially higher. And then secondly, what we're seeing is some sort of shorter term disruption as economies reopen, extra demand for goods and services, and some of the supply is struggling to keep up. So that is having an effect, and we're seeing some of that hit the stock markets more recently, particularly after the Federal Reserve's monetary policy meeting last week, where they started to look at not increasing interest rates anytime soon. But now we're sort of saying, well, maybe they won't wait till 2023 to increase interest rates. Maybe they'll do it towards the back end of 2022. So not a dramatic change, but it was enough to start to see just a bit of a rotation in stock markets. Some of the stocks that had been doing really well on the back of the potential reopening actually sort of struggled. And some of the stocks that have not done quite so well recently, some of the more growth stocks, including kind of some of the tech stocks, actually recovered. So it's almost a reversal of the trends, if you like. But in portfolios, we have always tried to maintain a balance of different styles of investing, different asset classes, different stocks, different regions. And so while some parts of the market have struggled in the last week or so, other parts of the portfolio have done well. And so generally, we've seen the portfolios emerge from this volatility at the moment relatively unscathed. And I think we're going to continue to see this. I still think it's very difficult to interpret a lot of this economics data, a lot of the underlying company earnings and profits data is very difficult to interpret just because, the pandemic has such an effect on numbers. It had such an effect on in a negative sense, and then the recovery then has a positive effect. So a bit more volatility for some time to come. But I do think having a diverse set of portfolio positions really helps that. Thanks very much.